Good afternoon, everybody. Welcome to August. This is your market update for Tuesday, August 1st. And as you probably know, stock market in July had a fantastic month. Dow extended its winning streak at one point in time to 13 days, which was the most since 1987. NASDAQ and S&P 500 had a great month as well. This first day of August, ultimately stock market, I still kind of trying to figure out its way, anxiously awaiting some employment-related data that's coming out this week, and also ultimately dealing with some corporate earnings reports that have come out this week that were lower than what the market had anticipated. As a result, Dow did close up on the day, only 71 points. NASDAQ closed down 62 points. S&P 500 closed down 12 points. This is a big week for corporate earnings, especially towards the latter half of the week, where a lot of major companies will release their earnings reports. So anxiously looking at that information and what that does to the stock market's direction moving forward. With mortgage-backed security, we looked at yesterday, the mortgage-backed security market trading in a very tight range, stable throughout most of the day, but then mysteriously at the end of the day sold off and closed down 30 basis points. That negative momentum carrying over into the market today. Initially, the mortgage-backed security market opened 19 basis points down. Currently is down 12 basis points, so off of its worst levels of the day. Most of the information or economic data that came out today would have initially been viewed as friendly to the bond market, as it really shows that the Federal Reserve and the job that they're doing as far as monetary tightening to reduce inflation and cool off the labor market some appears to be obviously working. And we see that, we saw a trucking company called Yellow that just shut down and released 30,000 workers. I think CVS announced today that they're laying off 5,000 workers. So, certainly it appears we're starting to see mention of layoffs in the headlines happen more and more frequently. So if they're looking to cool off the job market, certainly it appears that is in fact working. With that said, we have a lot of employment-related data that is coming out this week. As I've mentioned before, it kicks off tomorrow with the ADP employment report. On Thursday, we've got the initial jobless claims for last week, which is unemployment claims filed for the first time. It'll be interesting to see what that looks like next week with the layoffs that have been announced this week. And then, of course, on Friday, we've got the jobs report, the big hitter that will probably have a significant impact on the market. I think the market is anticipating that jobs report on Friday to show 200,000 new jobs. If it comes in less than that, I do think that will be market friendly for the bond market and ultimately, lead to some potential improvement in mortgage rate pricing. We've lost, a good bit of mortgage rate pricing over the course of the last several days, so it would be nice to see a rebound, which hopefully we will see towards the end of this week. We will continue to keep you updated. I hope you have a great afternoon, and I will see you tomorrow.